India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. Prashant, you saved the day. We were both missing in action to react to that big non-farm payrolls data, but I guess not too bad the way the market shaped up by the end
There's
of
a bit
it.
of a bounce, absolutely.
Yeah.
We'll just come through.
And there's a launch overnight as well, the Apple phone. Any of you are looking at it?
No.
I'm on my latest iPhone 13.
Me too.
So-
iPhone 13 Pro.
All right, well, let's just quickly run you through what you need to know as we begin a fresh new trading session. And it's looking much better as compared to, of course, the cues that we were handed yesterday morning, right? Because yesterday morning you had a big cut. But, you know, the markets have become, the markets, of course, always collective wisdom, but maybe they become a little more smarter at the edge, right? Friday, the market sold off over 1% and everybody was wondering, well, what's going on? And I think you got the answer with the US session, which was down about 2%. So we kind of paid the price a little bit in advance. So yesterday was not too bad. We had a nice bounce from the day's low, 200-point worth bounce on the Nifty. But I would still say we're in a bit of a tricky zone as far as overall global markets are concerned. I mean, it's not a clear green signal for a sustained kind of rally on the upside. Neither is it looking very weak or the fact that the market perhaps is going to, sell off in a big fashion. So it's a bit of a twilight zone. I think some clarity in a day or two hopefully should emerge. But let me start with, of course, what happened last night. So U.S. markets recovered as well. So you had the S&P, which was up about 1 point. Actually, both S&P and NASDAQ were up 1.16% each. So this is a decent bounce. Each and every sector ended higher. 84% of all stocks in the S&P 500 were in the green. The big news flow, of course, was that Apple 16 launched, but Apple was unchanged on this new launch. But historically, it's not as if stocks moved quite a bit on these new launches. We've sometimes seen moves in days post, so we'll see. Dollar index was up 0.4%. And, dollar went up on Friday. Dollar's gone up last night as well. So 101.65 is where the dollar index is at. And I think that kind of talks to 2 points. One, of course, is positioning, which was getting a little oversold. And second, of course, is this, not confusion, but this lack of clarity whether the economy actually is at what rate is the economy in the US weakening? Maybe it's not weakening as fast as what we thought 10 days back. Oil prices went up 1%. We're at about $72 a barrel on Brent crude oil prices. Tonight, you'll have the two presidential candidates in the U.S. elections facing off against each other on ABC News. And I think it's going to be tomorrow early morning for us by the time this happens. But that's going to be an interesting one. Lots of headlines can be expected. And will that I think from a market perspective, will it tilt the favor one way or the other post this particular debate? Remember what happened when Trump and Biden faced off against each other, and that debate performance from Biden was seen to be and was said to be the one which finally led him to step off and Kamala Harris to step up. All right, well, let's just circle back to the levels now. The Nifty yesterday, intraday broke below the 20-day moving average and then bounced sharply, and it was a positive daily close for the index. Near-term resistance is the 40-hourly exponential average, which is 25,026, and then the 25,100 level. We get to some retracement levels, etc. The very short near-term recent fall that we've had, the 61.8 is 25,100. And of course, the high then 25,333. Above that, you kind of really get into some momentum phase, but that's some distance away. The swing low of 24,753 will be an important downside level, which should be protected. For the Bank Nifty, resistance stands at 51,222, which is the 61.8% retracement of the recent fall, the very recent fall. And above this level, you can head to 51,750 for the Nifty Bank. And on the downside, the low of 50,369 is an important level for the market to hold. The Gift Nifty will indicate what the opening is going to look like. That bid, that strong local buy the dip bid is always there, and that prevents any dramatic fall. The question, though, is there enough in the tank, so as to speak, for a sustained kind of a move higher? And I think the answer to that is not very clear, at least not right now. As I said, over the next couple of days, perhaps more clarity should emerge. Surabhi.
Okay, absolutely. And I think because of this, the lack of absolute clarity, we're seeing Asian markets pretty range-bound, while they are, of course, reacting to the positive close on Wall Street. But we're not seeing a big rally across Asia. In fact, some of the markets like Hong Kong are slightly weaker. There's trade data that is awaited out of China. The general consensus expectation is that exports will see a rise for the month of August. Exports will see a rise of about 6.5%, and imports will be up marginally as well. So let's see. That's the big one in terms of data Q to watch out for. But lots of news back home. So let me quickly dial back in over here, starting first with the fund flow picture. And it was interesting because yesterday's numbers, we had a buy, a 4-digit buy from both sides of the spectrum, DIIs and FIIs. FIIs bought to the tune of almost just under 1,200 crore rupees. Domestic institutions, buyers of about 1,750 crores. So fund flow is not a problem at all. Plenty of corporate action to track today. Very, very interesting headlines, and we'll tell you more, as our colleagues gear up with the top 10 list. First of all, after all the hype surrounding Ola, we will soon have another pure play EV company list in the public markets, and that's Ather Energy. And Hero is going to be in focus on the back of that. This is a mix of a fresh issue of about 3,100 crores, plus there's an OFS. Existing promoters are going to be selling 2.2 crore shares, promoters and investors. And remember, Hero Moto has about 40% stake in Ather, so therefore this is going to be an interesting one to watch. Dixon, you've been hearing the conversations that we've had with the management for so long. The name is officially out. The tie-up is with the HP for laptops, notebooks, and a lot of the other computer hardware that they have applied for the PLI for as well. There's Tata Power, which is starting the production of solar cells at Tamil Nadu. So it's a big moment, obviously, for the company as well in the renewable chain. We'll watch out for any reactions on the stock. And last but not the least, Easy Trip Planners, always hitting the headlines. Now, the company went on to the stock exchange and they said that on the 13th of this month, there's going to be a board meet to consider more M&A. And this is just close on the heels of them getting into the EV space, EV buses, remember. So there's plenty happening. Let's keep our eye out on this. And then the GST meeting could keep stocks a little excited as well. The big headlines didn't come through. So the GST rationalization on insurance, health insurance and life insurance, that'll have to wait till probably the next meeting, which is going to be in November. The larger issue of compensation says that's gone back to a new GOM as well. But for the here and now, there are headlines because the rate on cancer drugs has been lowered further to about 5%. And on bhujia and namkeen, if that's what you like, the rate has been slashed from 18% to 12%. So a lot of these stocks are listed, remember, Pratap Snacks and, a couple of others as well. So we'll watch out for them. On car and motorcycle seats, however, there's an increase from 18% to 28%. So some of these GST announcements could keep these stocks in focus as well. So plenty of stock-specific action here anticipated today, I guess.
Well, that's right. So yesterday I was ruining my luck that I couldn't make it to work because of unavoidable circumstances. But otherwise, I was very, very keen to put out that buy on dips thesis. And it appears by the end of it that buy on dips thesis, well, it's pretty much well and truly on and it's intact. But the Nifty now needs to see a follow-through session. Because yesterday the buy on dips work, we saw a big recovery from the low point of the day. But today we'll have to see a follow-through session, which is going to be very, very important. And you have the Nifty Financial Services Index as well. That will play out its weekly expiry since it's a Tuesday. Now, yesterday there was a bout of short covering that did take place. Besides the strong institutional flows that we did see, we had a bout of short covering, both on the Nifty, which shed close to around 5 lakh shares odd, and the Nifty did pop up from the lows. And we had the Nifty Bank as well that did see a bit of a short covering bounce that played out. And for me, the Nifty Bank now needs to come to the party. And yesterday did a relative outperformance and it bounced back very, very strong. So the Nifty Bank for me holds the key from here on. Keep in mind in the last 1 year or so, the Nifty Bank has been a relative underperformer. If you look at the Nifty Bank in comparison to what the Nifty has done, well, it's been a relative underperformer in comparison to the Nifty. The Nifty is up close to 25%. You'll pull up the Nifty Bank, well, that's up close to 12 to around 13% odd. So from here on, the Nifty Bank will have to lead the way. And yesterday it showed good signs of seeing a bit of a bounce back, but it needs to protect the recent lows, which is extremely crucial. So let's tell you the numbers on the Nifty Bank then. The important mark to look at is yesterday, well, it went to these lows, so you don't want this level. This is the line in the sand, around 50,300, very, very important. We managed to cross the 20 DMA yesterday. That's why I said it was a good bounce back and trend, but we need to get past the 50 DMA. And the Nifty Bank is the one that's going to be the driving factor from here on. Moving to the options data on the Nifty itself, well, in a market that bounced back, you want to see put writing. And that's precisely what we saw. 24,900, 24,800 put, 24,700 put, all of them did see a fair bit of open interest build up. Moving to the Nifty levels then that we're looking at closely in today's trading session. The 20 DMA, well, that was conquered in trade yesterday, which comes in at around the 24,850 odd mark. So that's the important mark that we did cross yesterday. The lows as well needs to be noted, and the 50 DMA. So all these three are the support zones for the Nifty. Till we're holding about this 24,600 mark, you'll have to say that uptrend is pretty much intact. Well, as always, let's do a hygiene check on how the FIs as well as the clients are placed. The FIs, well, they're yet still net long. But, they've unwound quite a bit of the long positions in the last few days, close to 90,000 contracts low, so holding at around 1.5 lakh contracts. 66% of their positioning is on the long side. While the clients, they are short, but not very aggressively net short. It's more or less in that vicinity of around 40,000 contracts on the short side. So we're going to see a positive start, but let's see where we go from there. A follow-through session is what we're looking forward to.
All right, Nigel, thank you very much for that. Well, let's get you some calls now. Mahesh Nandurkar of Jefferies is weighing in. He says that the chief economic advisor has raised the debate of whether headline inflation or core inflation should be used for policy making. If this debate leads to softening of the broader banking policy environment, it may cause a turnaround in the fortunes of lagging banking sector stocks. The potential negative impact of rate cuts driving net interest margin compression and EPS cuts would likely be more than offset by easier liquidity and easier banking sector regulations. They remain overweight banks and financials.
Okay, let's move on macros. Shantanu Sengupta of Goldman Sachs says resilient domestic growth along with elevated food inflation has kept the RBI from easing policy rates until now. They're of the view that RBI will ease by a total 50 basis points going forward. That is 25 basis points each in December of this year and February next year on the back of easing food inflation and slowing growth.
All right, well, that's the macro market call coming in on inflation. Well, let's welcome in Lynn Alden, founder at Lynn Alden Investment Strategy. Lynn, great to have you with us here back on the program. Thank you for your time. Prashant here. Just a quick word, Lynn, on the roadmap for global equities from here as you see it. Do you see enough there to sustain a bit of a move, a rally here, or you think it's a bit tricky here?
I would be cautious until we see new highs on major indices. I think the biggest variable to watch right now actually probably ties to Chinese economic policy. In terms of both fiscal and monetary policy, that's probably the biggest lever right now. Their sluggish kind of domestic economy continues to weigh on commodity sectors, continues to weigh on a number of industries. And they have the tools to reverse that should the pain of the current situation offset some of their other goals that they're pursuing. But overall, across their fiscal and monetary sector, I think that's probably the biggest variable. And until we have more clarity on some of that, as well as some other variables, I think we're in more of a neutral zone right now for a lot of different risk assets.
Okay. Lynn, hi, morning. So what's the sense for Wall Street now if we get the rate cut as planned? First of all, what camp are you in? 25 basis points, 50? And if it's 25 and there is a semi-Goldilocks scenario still playing out, is it still, a risk-on market that we're looking at?
Right. So I lean toward 25, but I don't have a strong conviction on what this one rate cut's going to be. I do think we're going to see a series of rate cuts. My expectation is that it's not going to be particularly impactful for the U.S. economy because so much debt is locked in at much lower fixed rates. I think around the margins, it's more impactful for financial assets at these levels when we're talking about 25 or 50 basis points, as well as powerful for the dollar index and global markets. And so that's a variable that I'm watching, but it's actually not the biggest variable on my radar right now. I think right now the Fed is kind of overstated in terms of how much emphasis people are putting on it. And there are other variables in the economy, global economy, that I think are currently understated.
All right. Hi, Lynn. Good morning and good to see you in. This is Nigel on this side. Well, you have mentioned this in the past, and it's known, right, that if there are rate cuts, then we'll have to look at emerging markets, and some of them could potentially gain. How are you placed in a market like India?
Yeah, I'm broadly bullish on a number of different markets. So India, Latin America, China around the margins. There's a number of different markets that I think are good. I have some near-term concerns because the dollar index could be showing signs of a short-term bottom, a little bit oversold in the intermediate term. So when we look forward a little bit, I have a little bit of concern around, say, gold being overbought and the dollar being a little bit oversold. So once we get through that and get a little bit more clarity, I'm still structurally bullish on emerging markets and various anti-dollar plays as the Fed goes through a longer-term cutting cycle.
Lynn, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC TV18. As always, quick conversation with Lynn Alden, founder at Lynn Alden Investment Strategy. Lots of stocks to discuss, and we'll just tease it out for you in our top 10 segment, which is coming right up. Hero MotoCorp, GMR Airports. We have Tata Power, Dixon Tech, Action Construction Equipment, IRB Infrastructure, Ahluwalia Contractors, HG Infra, BKG Foods, and Gopal Snacks are stocks which perhaps should open in the green. There is none which is likely to open in the red this morning, at least essentially. It's news-based, news-related names. So that's what's coming up here on the other side with the research team. Top 10. Stay with us.
As we navigate the energy
Good morning. We've been telling you that it's a little quiet across Asia, but there's a lot of stock-specific action that we're going to have our eye on, and our research team is standing by with the CNBC TV18 list of top stocks to watch. And kicking things off is Vinny, who is our new in-house expert on all things transportation, among other things and other sectors. Vinny, so kick it away. I guess we're talking about EVs, and Hero is going to be in focus because of that.
Absolutely. Specifically keeping an eye out on Hero Moto, we could be expecting a positive move. Why? Because Ather Energy, which is backed by Hero MotoCorp, has filed for DRHP just last evening. Now, Hero MotoCorp holds around a 37.2% stake in the company. They're not going to be selling any of their stake which they're holding. Among the sellers, and this is an OFS that we're seeing. So yes, what we're going to be seeing, seller is going to be Caladium Investment, which is GIC Ventures subsidiary. They will be selling around 47.8% of the total offer of issue that is going to be there. And other than that, we'll have Tiger Global as well as 3 Straight Ventures, which will also be offloading some bit of a stake. Now, obviously, we've seen a lot of interest that's been building in terms of the EV side and EV industry. Ola Electric had a good IPO, and that is why we're expecting value unlocking that will be coming in for Hero MotoCorp, given that there's so much interest in the market for the EV space. So keeping an eye out on Hero Moto, a positive move is what we could expect today in the stock.
Okay, all right, Vinny, good to have you on board, and thanks a lot for that. Well, let's hop across to Vivek. He's tracking a whole host of stocks, including GMR as well as Tata Power. Morning, Vivek.
Well, good morning. Very interesting deal coming in from GMR Airports. Now, remember the company that held 64% stake in DIAL, which is the Delhi International Airport. Now, yesterday has announced that it plans to go ahead and acquire an additional 10% stake from a minority shareholder that was holding 10%. The minority shareholder was Fraport AG Frankfurt Airport Services. Now, this particular stake buy will be done at a valuation of $126 million, thereby valuing the airport arm at $1.26 billion. So, post the acquisition, what will be the shareholding of DIAL? Our minority shareholders, that is GMR Airports, will be holding 74%. The remaining 26% will be held by Airports Authority of India. Remember, the deal is subject to AI's approval as well as the approval of shareholders. The company expects to conclude the deal in the next 180 days. Now, talking about Tata Power has mentioned yesterday that they have commenced solar cell production at the 4.3 gigawatt solar cell as well as the module manufacturing facility that they have in Tamil Nadu. The positive development, the company also expects to go ahead and ramp up production with the remaining 2 gigawatt capacity capacity. So 2 gigawatt is operational. Another 2 gigawatt is expected to be operational over the next 4 to 6 weeks. Remember, the company had committed close to 4,300 crore of capex to go ahead and manufacture both cells as well as modules from this particular facility.
All right. Thanks very much, Vivek, for that. Well, let's talk about Dixon and Action Construction Equipment as well. Upasana's details here. Upasana, morning.
Good morning. First up, let me start with Dixon Technologies. Company's wholly owned subsidiary, that is Paget Electronics, has entered into a MOU with HP India Sales Private Limited to manufacture notebooks, desktops and all-in-one PCs. Company says it will be able to bring a range of HP personal systems to Indian customers, and mind you, HP is the leading global provider of personal computing and other digital access devices. Next up is AC. On the back of the order win, the company has received order from Ministry of Defence for the supply of 99 forklifts. Hence, even this stock will be in focus. So all in all, I expect both these stocks to open in green today.
Okay, Upasana, thank you very much for that. Let's head back to Vivek. He's watching out for a couple more names, including IRB Infra. Vivek, tell us more.
Well, that's right. Whole host of infra companies will be in focus today. First on the list is IRB Infra. Remember, for the month of August, the company has gone ahead and reported the operational toll collection update for both IRB Infra as well as its InvIT. So the collections have come in quite strong, 502 crore versus 417 crore on a year-on-year basis, which is showing a growth of a little over 20% on a year-on-year basis. So strong collections. Company also says that they expect the positive momentum to continue, and they in fact expect it to strengthen with the approaching festive season in the coming months. In the month gone by, the company says that there was quite a lot of disruptions on account of adverse weather conditions. Talking about Ahluwalia contracts, the order win coming in, the company has got 2 group housing projects at Gurugram. The order values are at 1,144 and 1,163 crore respectively. Remember, the company's order book now stands at a little over 13,140 crore and anticipating an order inflow in the range of 25 to 3,500 crore. So this goes a long way in going ahead and ensuring the company meets its FY25 target. Talking about HG Infra, the company has received a letter of award from MORTH for a road project in Gujarat. The company's bid was at close to 781 crore and the construction period is for 2.5 years. The company's order book currently stands at 15,640 and HG Infra expects order inflow in the range of 11 to 12,000 crore in FY25.
Okay, all right. Thanks a lot for that, Vivek. Well, let's wind this down then with Manglam, who's joining in to tell us about a couple of those namkeen snack companies. Hey, Manglam.
Good morning. So, let's put the clarification out from what has happened in the GST Council meet yesterday. They've gone ahead and cut the rate from 18% to 12% on extruded namkeen snacks. Now, for those who are believing that this would make our bhujiyas and all the other namkeens cheaper, perhaps not, because this is only on extruded namkeen snacks. GST on namkeen and other savory items like fruit and vegetable chips, bhujiyas, snack foods, etc. are already at 12%. So what does extruded snacks include? It is, the likes of your cheese puffs or potato puffs or something like a kurkure, etc. Those may get, aligned from 18% to 12% as all the others are trading at. This rate cut is basically ratification of the earlier discrepancy, so does not mean an immediate benefit for everyone. There would be a sentiment uptick that we would see on names like Bikaji, Pratap Snacks and Gopal Snacks, but the long-term beneficiary of this would be extruded snacks makers, the likes of Britannia and the unlisted players, the ones who make kurkure, etc.
Okay, all right, got it. Well, that's definitely going to be an appetizing piece of news to watch out for all the Bhujia fans out there. Thanks, Manglam. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them are Hero Moto, GMR Airports Infra, Tata Power, Dixon Tech, Action Construction, IRB Infra, Ahluwalia Contracts, HG Infra, Bikaji Foods and Gopal Snacks. There's no stock actually on the radar that could open up in the red just purely on the back of news flow. So going with an all green list today. That's on the equity side. What about the world of commodities? We have Manisha Gupta to join in for a quick wrap of all the overnight action. Manisha, good morning.
Morning, Sylvie. Thank you so much for that. Well, I'll start with the crude oil prices, where we have seen 1% of gains in the overnight market. Remember, last week was a 10% decline, and the third quarter till time is 15% down for the crude oil prices. The latest surge of gains or opportunity buying comes in because of supply disruption concerns from tropical storm Francine. Now, the National Hurricane Center has forecasted that this will strengthen into a Category 2 hurricane before making a landfall on Wednesday. And a lot of facilities there have been shut, evacuated ahead of this, and that is what has added premium to prices. In any case, it was slightly oversold with the kind of declines that we had seen. So some buying is what you are seeing in crude. But there is a bit of a buying that you are seeing across precious metals also. Gold is back above 2,500. Silver prices gained up 2% overnight. There is a higher chance of 25 basis point rate cut. But ahead of that, you have the U.S. inflation data coming in on this week. You have the CPI numbers on Wednesday and the producer price index on Thursday. So that will keep the markets volatile. Within the base metal prices, it's only perhaps tin which is trading in the positive, copper a bit as well, but aluminum continues to hold around 2-month lows. Iron ore prices near a year low as well. So it's a mixed bag when it comes to the industrial metals.
All right, Manisha, thank you very much for that. So, some big moves as far as commodities are concerned. Of course, the large one is iron ore prices, which are now below $90. For the first time in 2 years now. We'll take a break. Amnish Agarwal of Prabhudas Leader will be joining in with some fundamental stock conversation. That's coming up in just a bit.
The man.
Welcome back. Well, hope you're having a good morning. Well, let's get into some fundamental analysis. And to help us out with that, we have Amnish Agarwal, Head of Research at Prabhudas Leader, who joins us on the show. Hi, Amnish. Thanks a lot for joining in and good to see you. And as always, wanted your view on this entire EV play. We had the management of Ola who was sounding very aggressive the last few, couple of days or so ago with regard to market share, with regard to profitability as well. And we could potentially have a new kid on the block, which will be Ather. How are you viewing this space? We have the incumbents, the larger names like Bajaj, who are making good inroads and are in fact gaining market share as we have seen in the last 5 to 6 months. So your view?
You see, the space actually looks very interesting more from the two-wheeler angle. Because in two-wheeler, you see, people usually look at economy and EVs actually provide a very good economic value as far as your consumers are concerned. Now, coming to the stock specific, I think your EV players, they have been gaining ground except for last year when due to the FAME subsidy issues, the sales growth was not that high. But having said that, whether it is Ather, which is backed by, say, your Hero, or whether these are players like TVS and Bajaj, they are also making, you can say, big inroads into it. And given the fact that these guys already have huge distribution muscle with them, I think over a period of time, all the existing your players will also make a significant inroads into the EV segment. So per se, the outlook on, you can say, EV companies look positive. But having said that, as the larger players like Bajaj, Hero, TVS, they have started making big inroads into this segment. I think among the new players which have entered the segment, I think only a few will actually be profitable and sustain in the long term.
Okay, so which ones do you like, but Abnish, then? How do you play it?
You see, the main thing is that if you look at, say, last 15 to 18 months, people have been trying to play it more through some auto angs. But I think always direct play is always better. So as of now, I think we have got only one direct play, which is Ola, which I think seems to be not cheap. But in the long term, I think being the largest player, it seems very well placed. And even Ather, I think the losses are high, the losses are mounting. But given the fact that it is backed by Hero at some point of time, I think the company will also start getting traction. So I think there are two ways to play. One will be to, you can say, bank on players, whether it is TVS, Bajaj or Hero, which are making a sizable inroads into this segment. Or the second is if you want to go for a pure play, as of now, I think it is only Ola Electric. And around, say, 100, 105, 10, the stock looks reasonably interesting.
Got that. Fair enough. I just want to pull up Paytm. Paytm had a sharp move yesterday, ended about 4-5% higher. And that block is going to happen. I mean, and we put that out on Chatter as well with Nimesh. That block is very much sort of on the anvil over the next 1 or 2 days. Will that be a sort of, a clearing event for the stock, and then it kind of looks ahead in a more sustained fashion? We will see. but in the last 20 minutes, it moved about 20 rupees. Any thoughts here, Amnish? I don't know if you have coverage or any thoughts on this one.
You see, Paytm, one can only say that the things are improving. For example, they got a big cut in their revenues and all when this entire payment banks, they got some, you can say, thrash from RBI and it got banned. But I think in their existing business, which the otherwise your payments business, which they are doing, I think they are very well placed there and they are growing. So in terms of profitability, may take at least say 3 more years, but I think at the EBITDA level, they are growing over there. And one can only say that from these levels, I think the worst might be over for the company in terms of, say, numbers or in terms of news flows as of now. And in the medium to long term, I think the stock price will be a reflection of how they actually grow their remaining businesses and if there is any way back, if they can get, you can say, compliant in the part of the business which they have been asked to stop by RBI.
Oh. Okay, so that's Paytm. Let's see if there's any kind of favorable development. Of course, Nimesh has been telling us that maybe there could be some sort of interesting investor action in Paytm. He's been picking that up in D Street Chatter. Amnish, hi. So the snack makers have something to cheer about today with this lowering of GST. Any interest in these names? Pratap, Bikaji, Gopal Snacks? Any views here?
You see, among all these companies, if you look at, say, the Pratap and particularly your Gopal, so they are more centered on, you can say, rupee 5, 10, 15 kind of a packs in the snacking category. Whereas Bikaji is more on, you can say, family packs, more on sweets and all those things. So to that extent, I think the plays are very, very different in these two kind of companies. But having said that, in the longer term, the sustainability of Bikaji looks better than the other two because when you are selling more of a 5, 10 rupee packs, then your margins fluctuate a lot with the fluctuation in the raw material prices because you don't want to lose that 5 rupee or 10 rupee price point. So difficult for me to take a call specifically, but structurally, I think Bikaji seems to be better placed as of now.
Amnish, final question before we let you go. Crude oil prices have come down. We have seen price hikes that have been taken by some of these paint companies, and the paint companies actually have been big underperformers, the incumbents. Berger, Asian, Kansai as well. In the last 1 year, virtually unmoved, and the Nifty is up 25%. Do you think the time has come now to give them a look? Quality companies, the new player has come in there, and it seems there are a couple of tailwinds as well. Your take?
You see, 1Q was not good for the paint companies, and the reason why they underperformed in the last 12 months was predominantly because people feared that Grazim will come, the competitive intensity will increase, and so the profitability of many of these companies will get impacted. Now, two things here. First being that as far as your margins are concerned, their margins, you can presume, literally peaked out in FY24. Now, with the 1Q, there was some sort of a margin hit. But having said that, with the price increase which has happened in the crude, which has softened, the benefit will be seen in the third quarter of this year. But having said that, people are of the view that the increase in the intensity post Grazim's entry or the impact of Grazim as of now is not that much. And while 2Q due to rains and all might not be great, 3Q would be something to watch out for. But our take is that the impact of Grazim is not going to, say, be visible or fade away in the next 1 quarter or 2 quarters. It's a very long game, and the paint is a category where you need to build it brick by brick. So even now, I will not say rule out Grazim, you can say, hitting back in the long term because it's a marathon. But having said that, some of these stocks, they were big underperformers, but from the bottom, they have also rallied by 20%. So there still might be some steam left in many of these stocks, but particularly I think maybe Kansai and some of the other sector, you can say the mid-sized companies, they are cheaper, but many of these large companies, they are not very cheap given by the fact that the 1Q was not very good. So I would say still very cautious in making fresh entry into many of these names because post the run-up which has happened in the last, say, 3 to 4 months in particular, I think we might be looking at in the near term maybe max 5, 7% or 10% more from you.
Okay. Amnish, stay on. We'll come back to you for some more questions. The next company on our radar is EPAC Durables. The stock has surged actually more than 35% in the current year, 2024 so far. The company reported quite a strong set of numbers for the first quarter as well. The management foresees new business opportunities with diversified new and existing customer base perhaps in focus. To talk about this, we have with us Ajay Singhania, Managing Director and CEO at EPAC Durables. Thanks very much, Mr. Singhania, for joining in. So you had a first, good first quarter, right? We're talking about a sales growth of, I believe, about 77%, margins at about 6.7%. And now we are approaching the festive season with Ganesh Chaturthi kicking off the festivities, right? So just tell us, what is the expectation you're working with? What is the channel inventory like? And like to like, last festive over this festive, what is the growth that you're hoping to achieve?
Yeah, so good morning. So first of all, especially the main product we are into air conditions, we have seen phenomenal growth at 77% in Q1, and the journey still continues. So even Q2 seems to be a very good track, and the channel inventory is at bare minimum. So the momentum continues for AC growth and AC sales, and we foresee that this growth would still continue in Q3 and Q4 onwards. So overall, AC, the market, we expect to grow at almost 30% plus this year, and we will definitely surpass the market growth. So at a company side, we're looking at a growth of almost 50%, 45 to 50% growth we are looking at overall compared to last year. And in terms of festivity, the small appliances, the small domestic appliances we are into, so probably there was some slowdown last year, but this year we are seeing again a phenomenal growth even in the small domestic appliances. So be it mixer, grinders, induction cooktop, every product we see good traction, and the order book is really good.
Mr. Singhania, good morning. So for the full year, what kind of growth are we expecting, sir?
So we are looking at something around 45 to 50% growth.
Overall top line growth?
Yes, yeah.
And this, and for smaller, across the board, there is no discounting as such, right? Or is there a fair bit of discounting which is already which you can see as we get into the festive period?
No, so this is like the current months, August, September, and October, the peak months for the festive sales. So definitely the growth is much more than what we saw last year. So we are again looking at a growth of almost, let's say, 60-70% in this quarter.
Okay. Now I meant discounting, or there isn't that much which is underway.
So especially for us as an OEM, we work on the commodity prices. So the commodity, any decrease in commodity gets passed on. So for us, there is nothing called discounting.
Okay.
All right. Hi, Ajay. Good morning. Good to see you in. What would it mean in terms of margins? 45 to 50% growth on the top line. And what is the margin band we should work with? And also, you're trying to diversify a little bit. I think currently RAC contributes 80% of your total mix, which you're likely to see it come down a little bit. Are you on track by FY26? Does it come down to that 70% odd?
Yeah. So FY26, yeah, we're definitely looking to bring down the dependence on AC as a whole. So probably 26, we should be somewhere between 70 to 75%, and the small appliances components put together contributing almost more than 25%. So that's the ideal picture we are looking at currently, and we are on track. The new appliances we've added, especially washing machine, is now completely ready, and we have started the pilot production in our facility in Sri City South, and we are very hopeful that from October onwards we'll start rolling out the product to the customers. Okay, all right. And you were giving us the margin band as well? Yeah. So on margin side at EBITDA levels, see, last year we achieved almost 8.1% of EBITDA margins. So although we aspire to continue the same momentum, but at the same time, since we're investing a lot into the future products and we are ramping up the teams to get ready for the next leap. So, but anywhere between 7.75 to 8 is ideally the band we are looking at in terms of EBITDA margins. Okay, all right. And just one more word, since you're entering a new segment, which is washing machine, what kind of capacity do you have? How does it fit into the industry capacity? This is especially for us, getting into washing machine is a strategic decision, because most of our capacity is created for AC, the manufacturing capacity I'm talking about, are largely ideal during the non-AC season. And this is the time when washing machine really picks up. So for us, washing machine is a strategic product in terms of utilizing the overall manufacturing capacity. So, in terms of the capacity what we put up, it's almost currently we are starting with 40 to 50,000 units a month, and we'll gradually ramp it up to almost 150,000 in next 3 to 4 quarters. So this is what we're looking at. And see,
so fit. Yeah, Mr. Singhania, go on.
So fit into the market. See, AC and washing machine both are underpenetrated currently in India. So AC is anywhere between 7 to 8% is the penetration, whereas washing machine is 10 to 12%. So there's a lot of room to grow, and especially fully automatic is one product which we are entering into with. So there is a lot of conversion which is happening, premiumization. So people are moving from semi-auto to fully auto. So this is where we see a gap in the market.
All right, Mr. Singhania, we'll leave it there. Thank you very much. Appreciate you joining in, and thank you for sharing those details with us. Let's put the focus back on the market itself. Anuj is here with what he's making of things. Anuj, good morning.
Good morning, Prashant, Nigel, Surbhi. The market is showing signs that perhaps it's ready for a new swing. It's been a perfect market for long-term trend followers. Had a rally from 23,900 to 25,300 in August. After that, had a bit of a retracement, and that retracement lasted for almost 35% or thereabout, which normally is a good indicator of a market ready for a next swing. So yesterday's low of 24,750 now becomes a bit of a line in the sand. The Bank Nifty again defended 100 exponential moving average and had a big rally yesterday, closed right at the 20-day. In fact, both Nifty and Bank Nifty closed at a 20-day exponential moving average. So today is crucial because we need to see if today we can close at day's high. If that happens, that would mark the end of the correction and perhaps start of a new swing. For today, you can also focus on metals and chemicals because my sense is the market will now start to bet on 50 basis point rate cut next week, which is when you have the Fed meeting. And because of that, you might see some rally in global commodities. In terms of levels to watch on the Nifty, the first support is 24,750 to 24,800, which is where yesterday's low is placed, and the options data is also placed. And the bigger support is 24,500 to 24,600, the 50-day exponential moving average. The resistance, where we would actually start, 24,930 to 25,025, the 20 and 10-day exponential moving average, and then 25,083 to 25,150 based on the call writer zone. On the Bank Nifty, it's interesting because we have the Fin Nifty's expiry today, and we close at 10 and 20-day exponential moving average. In fact, right in the middle of those levels of 51,111, which is a 10-day, and 51,122, which is a 20-day exponential moving average. So it's a bit of a make or break zone for Bank Nifty. The resistance would come at 51,380, which was Friday's high, which is when it looked like the Bank Nifty was ending its underperformance, and then 51,591 based on the options data. And the support comes in at 5750 to 5850 options zone, and then 5350 to 5450, which is where the last 2 days low is placed. I leave you with the quote of the day. It's an anonymous quote, but good one. In a couple of years, you won't care about how long it took. You'll just be glad that you never gave up.
Inspiring as always. Thank you very much, Anuj. Really appreciate you bringing us, of course, all the data points in the market as well as some of those great thoughts. We will take a break on that note, come back on the other side, and now Mitesh Thakkar as well as Sudarshan Sukhani will join in with some trading ideas.
Okay, welcome back. There's about 13 minutes to go for the pre-open session, and we'll have first trades starting to come up in that time. Let's just address a few other stocks which have been in focus. Yesterday, of course, private financials, banks did very well, and that actually was the reason why the broader market looked a little buoyant and there was that bounce. The Bank Nifty, by the way, ending about 1% higher. It ended above the 20-day moving average yesterday, technically speaking. Amnish is still with us. Amnish, what looks best here as far as private financials go?
You see, as far as private financials go, I think all the frontline private banks, as we have been talking earlier also, that if you look at the last couple of years, so PSUs rallied very sharply, and today most of the private banks, whether it is ICICI I think is an exception, HDFC, Axis, IndusInd, Kotak, so they are trading way below where your long-term price to book values are. It doesn't mean essentially that HDFC will again go back to 3.5, 4, or even IndusInd will go, but definitely the way these companies are poised, I think there is some room for them to catch up, maybe say another 10-15% over the next 15 to 18 months, can't be ruled out. But having said that, I think in terms of numbers, one should not expect a bit too much because your deposit rates are rising, the interest rate cut is round the corner, and in the initial phase of interest rate cut, banks actually will see some more compression coming on their NIMs. So it is, I think, purely, I would term it as you can say, the sectoral rotation which is coming in, and a sector which has, or a segment, I would say rather, which has underperformed in the last 15 to 18 months. I think there is catch up in the banks which can happen, but it would be more in the medium term. It's not that on an everyday basis the banks will just continue to move.
Okay, so that's a view on banks. Amnish, any thoughts on Easy Trip Planners? I don't know if the company or the stock is on your under your coverage or not, but there's so much news flow, right? They're getting into EV buses manufacturing, and now apparently there's a board meeting later this week to consider more acquisitions. Any views?
You see, we are tracking the tourism space, but I'm not on top of what is happening on the, you can say, new forays of the company.
Okay, so since you mentioned tourism, is it hotels? What is the best play for you if we are looking at anyone who wants to add a bit of tourism to the portfolio? Now there is a tourism index and there are passive products on that as well, but individual stocks, what would you pick?
You see, there are actually several ways to play tourism today. For example, hotel stocks last 2-3 years, they have rallied. Still, I think in the coming, this quarter, I would say mixed, but in the coming quarters, I think the bookings and all, they have been pretty strong for all the hotel companies. So I think hotel companies look good from here. From here on, not multi-baggers, but I would say some sort of a secular, you can say low to mid-teen kind of returns can come over the next 2 to 3 years. Then one can also play it through something like, you can say, aviation, where Indigo has been doing very well, more like a consolidated market. So Indigo is, I think, one stock we have been very positive about. In addition to it, your Shelley and Lemon Tree are the two other stocks which look good, quite interesting to us. IRCTC is another stock which we cover, but I think it is in a zone where the profit growth is not that high and the valuations, we don't have much scope to re-rate from the current levels. So I think one is your aviation and the second is hotel. These two segments look good as far as tourism is concerned.
Absolutely. You know, there used to be a time when we used to talk about these Apple events and Apple launches just for the sort of, just because the products are fancy and very desirable, right? I mean, but it's not just that anymore. Apple and the Make in India that Apple is doing here in the country is actually quite large. The stated aim, of course, is for Apple to make 25% of everything it does out of India over the next couple of years or so. Already we are looking at tens of billions of dollars worth of output coming in from the country. So last night we had Apple coming out with its new product range, Apple the iPhone 16 and a bunch of other things as well. Also Apple Intelligence, which is the AI launch, which will happen in its beta form next month. Let's quickly get you a quick sort of update with what was done. This is Steve Kovac of CNBC with the details of what was announced and said.
Apple's going all in on artificial intelligence features for its new iPhones, but it's going to be several more months before we see if it's going to pay off. First, let's go over the new iPhone 16 lineup. Like last year, there are 4 models, 2 sizes of the regular iPhone 16 and 2 sizes for the 16 Pro. The big new hardware feature, a button on the side for controlling the camera shutter and other camera features. And speaking of the camera, the iPhone 16 is getting an exclusive AI feature later this year called Visual Intelligence. That lets you point the camera at something in the real world and get more information. It's similar to features already found in products from Google, Meta, and OpenAI. Other than that, it's your standard iPhone upgrade. The screens are a little larger, the battery life is better, and the new processors help the phones run those upcoming AI features. As for the rollout of Apple Intelligence, Apple made it clear it's going to be a slow one over the next several months. The iPhone 16 will get the first AI update this fall with a limited set of features like summaries of your text messages. But the best AI features, like a more powerful version of Siri and integration with ChatGPT, won't come until later, and some won't happen until 2025. Apple did give some more hints about the AI rollout outside of its initial U.S. English launch this year. It'll come to other English-speaking countries like Australia and Canada at first, and more languages like Chinese and Spanish are coming next year. But overall, we did not learn too much new about Apple's AI plans. Besides the iPhone 16, 2 other product categories updates launching, a new version of the Apple Watch with a larger screen and thinner design, and a new version of AirPods Pro that can be used as a over-the-counter hearing aids. All of the products go on sale September 20th, giving Apple a few days of new product sales to end its quarter. But it's going to be many months after that before we find out if Apple's bet on AI pays off.
Okay, so that was Apple's big event and all the new snazzy launches announced overnight. By the way, that trade data that I was talking about, that's finally come out in China. Numbers just trickling in. And it's really strong, a lot better than expectations, because the export growth in August is 8.7%. The poll was 6.5%. And that's led to a bit of a rebound on the Hang Seng. Hang Seng was negative when we started the show, this conversation with you at 8 a.m. And now the Hong Kong markets flipped into positive territory. In fact, let's look at Shanghai. It's still down, but Hong Kong is the one that has turned around. So good export numbers out of China right now. More data trickling through. Well, with that, let's head across to our tech experts for a view on trade today. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, good morning to both of you. Mitesh, so let's talk index first. Do you see higher levels given the rebound that we saw yesterday? What's the view?
The one positive thing which happened was that the markets did not record a closing below this 24,800, 820 support zone. And while we had a recovery, it wasn't showing very strong signs of reversal. So my sense is that there could be a struggle for one, two more sessions around this level. In case we don't break below it, then I think, we will start this consolidation process, which I thought initially will happen between 24,800 to about 25,150 or maybe even 25,300. But in case we start breaking below 24,800, then I would be worried and cautious on the market. So for the time being, I'm watching the index closely. The good thing was the recovery in the bank nifty, and a lot of banking stocks have turned the tide on the positive side. So my sense is that it might take another session or so. But if we can manage to, just hold above this level of 24,800, I think then the market should see a stronger bounce.
All right, Mitesh, very valid point. In fact, earlier today as well, we have made this point about the Nifty Bank. The recovery was very encouraging. But what are the levels you're looking out there? Because yesterday it made a low at around that 50,300, but the bounce was phenomenal. Tell us the levels you're tracking.
So, Nigel, on the downside, while the intraday low was around 50,370, the actual support level for me is around 50,400. So basically, you met the support level, had an intraday penetration, and then kind of came up again. On the upside, 51,400 has some kind of minor pivot on the 2-hourly charts, and then 51,700, 800 was the high, which 750 was the high, which the Bank Nifty made on the 3rd of September. So I think these are two targets on the upside, 51,400 followed by 51,750.
Okay. All right, gentlemen, stay on and we'll come back, get some trading ideas with you in terms of individual stocks as well. Quick break right now. We'll come back. We'll also have the pre-opening rates, as well as we'll connect with Abneesh Roy of Nuvama Institutional Equities as the government slashed GST rates on namkeen. So what does that mean for some of the snack stocks?
Welcome back. Well, in a few minutes, we'll get the pre-opened rates. For the time being, let's go back to our technical experts who are with us. Sudarshan, I wanted your view on trade today, how you approaching trade, the levels that you're tracking, and also you could fill us in with your stock picks.
Yeah, good morning. See, yesterday we had a small mild rally. Now the problem is that these rallies could be dead cat bounces or they could be the beginning of a new uptrend. Unfortunately, we cannot know in advance. So I am assuming that this market is likely to build a base, consolidate, and then only give us a sign that the bull market is resuming. So for today, the trade is to be carefully looking at a buying opportunity only on a dip. The fact that you buy on a dip brings your, say, risk lower. So if you get an intraday dip, take a chance and be prepared that it may or may not work out. As usual, I do not recommend any short positions at all. Now, for the Nifty. Now, my individual stock picks. ACC is a buy with a stop under 23.90. Power Finance Corporation, which has rallied significantly, is now an intraday short with a stop above 540. Tata Motors also is giving signs of distribution. Look to go for an intraday short, stop above 1,050. And finally, Metropolis Healthcare is a positional buy with a stop below 2120.
Mitesh, good morning. Sudarshan, good morning to you also. Mitesh, what would your individual stock calls be for the morning?
Morning, Nima. I have more of buy calls, couple of FMCG names and a banking name features on the list. So I have a buy on Dabur. It made a fresh swing high. A good setup on the short-term charts. So keep a stop below 654. Look for a first target of 680. Britannia is the other one from the FMCG sector. Keep a stop at 5850. Look for targets of around 4100. And HDFC Bank makes the final buy call, which is a buy with a stop at 1633 for targets of 1680. One sell call though, which is Cummins India. Keep a slightly higher stop at 3755. Look for a target of around 3500.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you for your 9-10 call. For the time being, let's get in some strategies, derivative strategies from Soni Patnaik of JM Financial. Hi, Soni. Good morning. Good to see you. And as always, what's on your radar today and how are you approaching trade?
Good morning, Nigel, Reema, Prashant. Thank you for having me on the show. So I think for Nifty, intraday resistance is somewhere around 25,050. Only above that, we can see a 50 to 70 points of a short covering. Important crucial level for Nifty to watch out would be 24,800, below which fresh round of selling can be seen. For Bank Nifty, the intraday resistance is around 51,250. Above that, we can see a small short covering on intraday basis towards 51,600 to 51,700. I think these are the key levels to watch out for when it comes to indices. But it does not stop us from tracking good stock movements. We can see fresh breakouts coming in FMCG space. I think Dabur is a stock to clearly look out for. It has built up very fresh long positions and has given a very strong breakout. So we recommend a buy in Dabur at around current levels of 662 and on very small declines up to 656, keeping a stop loss of 645 and a positional target of 695 to 700 can be seen. A short-term intraday play can be seen in Sun TV, which has given a good option chain breakout yesterday by closing above 800. So Sun TV is a buy for intraday or a short-term movement. One can buy it around 810 and on small declines up to 806, keeping a stop loss of 797 and a target of 830 and 840 can be seen.
Thank you very much for that. Let's get to the momentumizer stock of the day. Vamakshi now joins in. Hi, Vamakshi. Good morning.
Well, good morning, Reema. Alembic Pharma is the stock that I'm watching out for. Keep in mind that the stock was up nearly 9% in the trading session yesterday at a time when the Nifty Pharma Index was down nearly 0.2%. In fact, on a 3-month year-to-date as well as 1-year basis, the stock has managed to outperform the Nifty Pharma Index. But the last 1 month has been some sort of an exception because in the last 1 month, the stock has declined by around 1%. At the same time, Nifty Pharma Index has surged by almost 4%. In fact, the stock hit an all-time high of around 1,285 on August 8th, but since then it has corrected by over 20% and hit a low of 1,025 on August 29th. Since then, it has managed to recover most of its losses and it is now attempting to take out the previous high it had created on August 8th. Of course, there has been a recent trigger wherein the company has received the US FDA not for albendazole tablets used for pork, dog, tapeworm diseases. And in fact, all of these gains that we've seen have come on the back of strong volumes. In fact, volumes have picked up over the last 4 trading sessions and in fact, yesterday as well, the volume was very strong, nearly 5.5 times the 10-day average.
Lovely. Thanks a lot for that, Vamakshi. We'll keep an eye out on that one. But let's focus on the FMCG pack. Yesterday at HUL that bounced back in trade because they're evaluating what to do with their ice cream business. You have paint companies as well that have bounced back. And also we have snacking companies, Bikaji Food, Pratap Snacks, Gopal Snacks. All of them will be focused after the government slashed the GST rates of namkeen and savory products. To understand about the impact on all these names, we have Abneesh Roy, Executive Director at Nuvama, who joins in on the show. Hi, Abneesh. Good morning. Always good to see you in, and thanks a lot for joining in. Give us your initial take on this piece of news first, the pullback in GST rate. Any potential impact on these snacking companies?
Yeah, good morning. Thanks for having me. So firstly, on the GST rate cut, frankly, it doesn't really impact Bikaji anything significantly. Because namkeen was already at 12%, what the government has changed yesterday was essentially in the excluded snacks, puffs, etc., which was at 18%. So for Bikaji, namkeen, it is already at 12%. For ITC, Haldirams, etc., this removes the litigations, etc., provides clarity. So it is good that now the entire savory snacks will be essentially at 12%. So nothing changes for Bikaji, but essentially it reduces the litigations, etc.
So what comes in this excluded snacks, which will now be taxed at 12% versus 18%? You spoke about puffs. What else? And any impact on other listed players like Gopal Snacks or Pratap Snacks, if you look at it?
So we cover Bikaji in terms of other products. If you see all the extruded products, extended products made from cereals, etc. So it could be puffs, it could be crunchy snacks, it could be the kurkure, those kind of extruded snacks. Essentially, those were at 18%. So I don't think in the listed company there is any big impact. If you see ITC, there could be some impact, but for ITC, the bigger businesses are cigarette and foods, and it's a very diversified company. So I will say not too much of an impact, frankly speaking. It reduces the uncertainty and litigations within the sector. It's a positive step, but I will say that for Bikaji, etc., not anything significant because they are anywhere at 12%. Namkeen was at 12% anyway.
Got that. Abneesh, hi, good morning. Yesterday there was a bit of a move on some of these consumer names, jewelry names. We spoke with the management of Senco yesterday, and they said that September is turning out to be much better than what they thought, and consequently Q2 is looking a lot better as well. I'm not sure if that is what lit the fire under most of these names, but they were all higher. Any thoughts on what's going on here, and what names do you like?
So this is as per our expectation. If you see, we have been quite positive on the consumer sector, both staples and discretionary. And if you see, even Unilever has hit life high. We are also seeing momentum coming back in the paint stocks. Coming back to a specific question on jewelry, yes, of course, the government step of cutting down on the custom duty, that has clearly made the footfalls coming back. And we are expecting double-digit kind of a footfall growth for most of the jewelers post that step. And now the marriage season is also picking up. So before that step, if you see, Titan was struggling with mid-single digit kind of SSG, and there was competitive pressure also. But now because the growth has come back to the sector, the marriage demand is also now going to pick up. I will expect that most of the jewelers post that step in the ensuing period should see double-digit sales growth in the jewelry business. So we are positive on Titan. We had upgraded Titan to a buy, and we are happy to see footfalls coming back. In the broader consumer space, staple space, we continue to like companies which have higher rural salience. So HUL, Britannia, Dabur, Imami, Colgate. These will be our top 5 picks. And we also like paints. We expect that paint stocks further headroom for re-rating is there. It has done well in the last 1.5 months, but we see more re-rating potential there.
And from paints, you'll put out a note and you'll bang on, Abneesh. So congratulations on that. But which is the name that you're most bullish on? If you look at Asian, Kansai, as well as Berger, in the last 1 year, they haven't moved. But as you said, in the last 2 months or so, they have bounced back 8 to 10%. So what's the pecking order?
So we'll prefer Asian and Pidilite the most there. In fact, CNBC, the earlier discussion was on Apple phone, 1/4 of the manufacturing moving to India. Pidilite is doing great work there. They have tied up with Qualtech company of China, which in fact works with some of these players. So I would expect Pidilite to get huge business over the next 5 years in the adhesive, which is used in iPhone, in the EVs also. So that's one company which is expensive, but it is a compounding machine. It keeps looking at these kind of white spaces. In the pure paint space, we like Asian paints the most. We expect that the operating leverage will come back. But frankly speaking, Asian and Berger have very similar growth metrics. Yes, Berger gained market share in Q1, but it's a more regional player. On a full year basis, we expect Asian and Berger to grow similar. Even in Indigo paints, if you see the concern on the PE stake sale, that is getting reduced. So I will say even Indigo, in terms of valuation, the comfort is high. So I think the entire paint space will do well. But if you ask for one name, it will be Asian paints.
Okay. A quick word. PN Gadgir, the IPO opens up today. Have you had a look at the numbers? How does it compare with peers? Have they left money on the table?
I can't comment on that name. We like the broader jewelry space. There is a huge opportunity in terms of organized gaining share, and now the custom duty cut. So we like the entire space. We like Titan, which we cover. I can't comment on that.
I have coverage on Goldium, Abneesh? Abneesh, do you have coverage on Goldium, the lab-grown diamond maker?
No, we don't have coverage, but of course that space is seeing huge disruption in 2 ways. Of course, we have seen lab-grown diamond prices collapse in the last 5 years by 70-80%. That's a concern, and we are seeing a lot of supply there. So what Goldium I think is doing is they are going into now branded. So looks interesting, but as it's a late entrant, right? We are seeing even the titans of the world. They have an acquisition in US. Of course, they have very serious plans on every part of the jewelry. So it's a competitive market. So we will bet on the larger players definitely. But this is a disruptive market, and the lab-grown diamond will be more at the entry level. We expect both lab-grown diamond and the real diamond to coexist. India, real diamond has value. Lab-grown diamond, as I said, last 5 years, 70-80% destruction in value is there. So it will be more at the lower end. We don't see the jewelry demand or the core demand really shifting to lab-grown in the medium term.
Thank you very much for that. In a big global development, the US House of Representatives has passed the Biosecure Bill that targets China biotech. So the move is positive for some of the Indian pharma players. Ekta joins in for more.
Well, yes, thanks for that. Well, the Biosecure Act, I'll start by telling you what exactly it is. The news is that the US House of Representatives have passed the Biosecure Act. The bill will now go to the US Senate for a vote. Now, what exactly is the Biosecure Act? It aims to reduce dependence on biotech companies from China over the next 8 years. So the Biosecure Act has named 5 Chinese companies specifically, which is BGI, Genomics, Wuxi, Aptech, etc. Now, pharma companies, as a result of the Biosecure Act, have been exploring ways to diversify their supplier base in order to basically mitigate the risk over the next 8 years. Now, stocks in focus back home would be the likes of Loris, Piramal, Newland, Syngene, Divi's, as well as Suven, because all of them have CDMO operations and would be vying for this kind of incremental China plus one or diversification of the base that could happen. But it's a long-term opportunity. So, for example, we have seen that over the past couple of quarters, companies have made comments. For example, Loris has said that there is a shift to unfold over the longer term. Companies will begin by handing over smaller projects. Piramal Pharma has said there's an increase in exploratory discussions. Customers are, however, continuing to assess their choices. Newland yet to see substantial impact in terms of active requests for proposal. But remember that Newland is an API company, which is different with a biological focus. So it might not incrementally benefit immediately. Syngene is probably one of the bigger companies which is seeing a shift right away. So they have said there's a material shift in big pharma sourcing strategies. They are participating in pilot projects, and they've seen a 50% year-on-year increase in the request for proposals in terms of value in Q1 itself. Now, the challenges for Indian pharma companies is that, Indian companies lag in experience, trust, technology, capacity when you compare them to, say, the South Korean companies or even US and European companies, which are, probably looking at the opportunity. And there is competition coming in from other companies as well, which we have to now focus on.
All right, Ekta, thank you very much for that. So keep an eye out on some of these names as we open up. We've got the first rates coming up. I think the Nifty in the pre-open is up 60 points. So it's a very healthy start. We have a few seconds to go for the market open. The first rates will start to come. We'll look at the indices and we'll go down and look at stocks and how they're opening up. So what do we have on the Nifty? We are starting with at about 24,500, 24,998 on the Nifty. Sensex is up a quarter, 81,724. Bank Nifty is up a 0.25%, 51,258. The mid-cap index is up nearly 1%. So broader market doing much better than what the large cap indices are doing. And I think that's a bit of a change from yesterday because the broader market was not doing all that great. Market breadth was negative, but this out of the gate straight up is looking a much better picture. So a quarter on the Nifty, 25,000, around 25,000 so far is what you have. So 70 after yesterday's 80-point pop. The heat map on the Nifty on the side of your screens indicating what's happening, just about 6 or 7 stocks in the red. Everything else is starting in the green.
Well, the small cap index is up nearly 0.8%. The mid cap index is up 0.8%. The small cap index is a gain of 1%. And it's a solid advance decline ratio. 6 stocks advancing for 1 stock declining straight away at the open. In terms of the big sectoral gainers, it's IT leading the charge. The Nifty IT index is a gain of 1%. There is a Motilal Oswal note where they've done a long, big, thematic research on the technology sector. and they believe the sector could be on the cusp of recovery after enduring a prolonged period of discretionary spending cuts. So looking at the Nifty right now, LTI, Mindtree, Infosys, Tech Mahindra, all these stocks are staring at a gain of 1%. For Motilal Oswal, the top picks are HCL Tech and LTI Mindtree in the large cap space. They like Persistent Systems, where they see a 22% upside. And for Coforge in the mid-cap IT pack, Motilal Oswal has upgraded the stock to a buy. Their target price stands at 8,100. So IT is a pocket of strength. Other than that, pharma continues to lead. So Divi's Laboratory and Apollo Hospitals are also up and about in trade. In the banking pack, you've got Axis Bank, which has got a green tick to begin trade with. On the way down, you've got cuts coming through in life insurance companies. Maybe some disappointment on the GST front. SBI Life, HDFC Life stocks are down 1.5%. Auto names like Bajaj Auto, M&M under pressure. And just pull up Hero MotoCorp, where its subsidiary Ather, where Hero MotoCorp has a 37.5% stake, is looking to raise about 3,100 crore via an IPO. So Hero MotoCorp too has opened up in the green.
Well, a lot of movers actually for the broad markets as well. Rima, Ahluwalia Contractors, well, they are that stock is up close to around 4% odd. They back two orders worth around 1,300 crores for group housing projects. So that stock continues to hold with a gain of around 4.5%. The other big movers this morning are ACE. The stock has seen a sharp correction from the recent peak, but they are backed an order from the Defense Ministry for supply of 99 forklifts. So that's why that stock as well is higher. So ACE comes up for you on the screen. And HE Infra, they have got an LOA for a HAM project worth around 781 crore rupees from the Road Transportation Ministry. So all these three names, the big movers in this morning's trading session. IRDA has seen a sharp correction from around 320 to 220. They've signed an MOU with SJVN as well as GMR for 900 megawatts of hydropower project in Nepal. The street lights are, that stock in fact is moving very, very well. Oracle, overnight you had the parent who reported their numbers. The stock was up 9% in after our trading session. So in reaction to their quarterly numbers, the parent was higher. They've announced a partnership with Amazon Web Services to provide database services. There's a bit of a rub-off on Oracle Financial over here as well. That's up close to around 3.5% as we speak. So good move is what we're seeing out there. Vedanta goes ex-dividend, so that's why it appears the stock is down 4%. But adjusted for that, actually, the stock will be more or less flattish. In fact, I think it's up close to around 1% adjusted for that dividend. So the stock is actually not done, but it's gone ex-dividend. So explains why it appears the stock is under pressure.
You know, I was talking about Paytm earlier. And Paytm is the biggest volume-led gainer on the NSE. So look at that, 3.5% higher, 20 rupees on top of yesterday's 20 rupees. So that's 650 on Paytm at this point in time. So that's the move that you're seeing right now. And of course, I mean, the others we mentioned, Oracle Financial Services, large volumes, IREDA we mentioned, Coforge, I think we put out earlier, 3% higher, 6,700 nearly. You got Ecos Mobility, which is up 5% listing from last week. So 506. Laurus Laboratories is, back above 500 rupees. It's been a huge underperformer. It's up about 2.75%. Bikaji Foods, we mentioned 5% on Bikaji. 880, I think, is where that is coming in right now. Nazara is up 5%, 967, 968. Very large volumes. Castrol India is up at 3.5%, 265 on Castrol right now. Markson's Pharma made a move yesterday. It's up at about 3% this morning as well. So there is enough and more, which is coming up at this point in time. Well, maybe just a quick look at what's down as well on volumes. There is Oil India, which is down 1.25%. Deep Industries is down about 3%. PNB Housing went up 7% yesterday. PNB Housing is pulling back about 2.5% this morning. SBI Life, those insurance numbers yesterday, 2% lower on SBI Life, 1863. Actually, insurance, life insurance, because I can spot HDFC Life as well. HDFC Life is down about nearly 2%. So the life insurance names are seeing some moderation coming through. Jubilant Pharma was a big mover, 10% yesterday. That is seeing about a 2% pullback. You know, some of these are just reversals at this point in time, but that's what you have. Overall, market breadth is very positive, nearly 6:1 in favor of advances. The Nifty is up about 50 points, 24,987. Pankaj Murarka is with us, CEO and CIO at Renaissance Investment Managers. Pankaj, thank you very much for joining us. Great to have you with us here on the program. Appreciate it. Last time we spoke, we were talking about what you like in this market. And one of the names which sort of remained with me was SBI, State Bank of India. So I just want to start with banks per se, because more and more, it's not recent, but more and more people are kind of veering to the idea that large banks, mostly private financials, and maybe an SBI, I mean, their time has come, will come, because, there is valuation comfort, etc. So just wanted your thoughts to begin with, and then we'll look at other sectors as well. Go on.
Morning, Prashant. Well, Prashant, from our point of view, we've been underweight banks for a very long time, almost 2 years, but now we are gradually closing underweight positions because we think probably we are in the last leg of cyclical slowdown in the loan growth. Probably we see loan growth picking up from next year onwards. And probably once we have few rate cuts in place, we'll see some initial margin pressures on banks for the next few quarters. But we don't see that as significant. And the fact remains that in a market which has moved pretty sharply over the last 18 months, banks is now one segment of the market where valuations are far more reasonable compared to the overall market or the broader market. And more importantly, asset quality for the banking sector seems fairly benign. Large banks are in a very sweet spot in the sense credit cost is extremely low or very benign, and growth is reasonable. And on top of that, as I said, valuations are pretty reasonable. So sum total of all of it, we are turning positive on banks, as you said, some of the larger private sector banks, and including SBI as well. And but from our point of view, we as investors take a view which is slightly more medium term over the next few years. And from that point of view, banks certainly look much more attractive than some of the other pockets of the market at this point of time.
So to close out your underweight position, you're buying large private sector banks and State Bank of India. What about the other PSU banks? Are you looking to buy them?
Well, generally our portfolios are focused portfolios. We just have about 25-30 names. So in a particular sector, we can accommodate only 4 or 5 names. So we stick within the state-owned banks. Our preference is for SBI because SBI is far better in terms of qualitative metrics, be it ROEs or the risk-weighted assets versus some of the other banks. But I'm sure as we see traction coming back into banks, some of the other banks will follow SBI.
Hi, Pankaj. Good morning. Good to see you. And since we talk about banks, let's talk about a couple of other financials as well, like insurance. There was that hope that there's going to be a pullback in GST rate. That didn't come about. Some of these stocks have still not performed big time. Case in point being HDFC Life has been a relative underperformer. How are you placed on the life insurance companies?
Nigel, while we don't have in insurance companies, life insurance companies, but my view is the worst is behind the sector. The sector has had significant headwinds in the last 2 years. If you see, starting from the budget of last year, where there were some of the larger insurance payments were brought under the tax net, and then there's been a sharp reduction in the distribution payout on ULIPs and so on and so forth. But I think the sector has digested all of those headwinds, and we've started seeing some reasonably healthy growth in the sector over the last 2 quarters. So I think the fact that India's savings are accelerating and insurance is one of the prime medium for savings for large masses, apart from the coverage that it gives, I think from here on, insurance as a sector or some of these insurance companies will do well.
Pankaj, you'd also gone overweight on IT a couple of months back. Now that trade seems to have played out because in a span of 3 months, it's given pretty good returns. What is the call now on technology? Are you still overweight? Would you look to pare it down, increase your overweight?
No, Rima, actually, that's a slightly more longer-term call. So as you rightly said, we've been overweight IT, some of the larger names like Infosys and Tech Mahindra among the larger names, and we have exposure to some of the mid-cap names, including Birlasoft, Persistent, and Coforge. And we think that we are in the early stages. While stock prices have moved in the last few months, we think more importantly, what we are really looking forward to is we're looking forward to a revival of IT spends over the last 18 months because of rising rates in US. A lot of discretionary projects and spends have been held back. And we think once US gets into a rate cut cycle, starting probably towards 3rd week of this year, when we get the first rate cut in US, there's a lot of pent-up spend that is there amongst the, let's say, the Fortune 500 and the Fortune 2000 companies globally. And these companies can't hold back spends for a long period of time. So we think now once you get rate cuts in US, IT spends in US will come back very sharply and very strongly. Because for Global 2000 or the Fortune 2000 companies, it's a necessity. It's not a choice or a discretion. Any company not investing into technology, into adoption of AI and some of the other tools probably is risking its survival probably 10 years out, and which they can't afford to. So we see a very strong environment for, one, we see a gradual pickup in discretionary spends, and more importantly, the trend getting much more stronger as we move towards next year, probably in the second half of next year. So we remain constructive or positive on IT from a slightly more medium-term, longer-term perspective. Slightly more longer-term, my view is that the upcoming IT spend cycle that we're going to experience over the next 2 or 3 years probably will be much longer than that, than traditional IT cycles that we've seen in the past. And probably it could be one of the more ferocious IT cycles that we have seen in the last 25, 30 years. Because AI, remember, AI is the internet moment for the world. It is going to revolutionize and change the world, and enterprises will have to adopt and implement AI solutions at a very rapid pace. So we are slightly more bullish from a slightly more longer term perspective when it comes to IT as a sector.
You know, in that 25-30 stock portfolio, is it what's the leaning to large caps?
Generally, our portfolio is flexi-cap, Prashant, so we run about 50-60% large caps, and the balance is spread across a handful of mid caps and small caps. So,
do you own any with market caps of less than 15,000 crores?
Yeah, we do have some exposure, Prashant. But then when we're looking at smaller companies, obviously we're looking for companies, outstanding companies, which can, deliver very strong growth. And generally our endeavor is, when you're investing into small caps, you're looking at the small cap from a 5-year prism, where we actually think that the small caps over the next 5 years can actually transition to being a mid cap by virtue of consistent strong growth. Or when you're looking at mid caps, you're looking at companies which can change the orbit and probably transition from being a mid cap to a large cap over the next 5 to 7 years. So clearly, when you're looking at mid and small caps, you're looking at outstanding companies which can deliver very high growth on a sustained basis and change their orbit.
Why don't you talk us through one or two names, just to use an example, Pankaj? I mean, portfolios are disclosed, so nothing that you don't already own or thinking of owning, and just how you're thinking about a name or two. Go on.
Sure. So in the capital goods space, we've had exposure to a few of these companies, which were actually mid caps 4 years back when this investment cycle started. Something like a Cummins or ABB, all of these companies were mid cap, and now you see the kind of fundamental performance and earnings growth, and also supported by stock price performance. Some of these companies have actually become large cap. So essentially, we like to buy companies slightly be ahead of the curve or ahead of the cycle, look at ideas from a 3 to 5 year perspective, and look at companies which can deliver outlier growth, and probably then be investing into these companies slightly ahead of the street, and then be a patient holder for the next 5 years or 7 years and reap those rewards or benefits, I may say so. So clearly, we own some of these attractive ideas on the NBFC, on the let's on financials on mid-cap NBFCs. One of our exposure is a company called Poonawalla Finance. We think, from a classical mid-cap, this company actually has all the potential to be a large cap over the next 5 years, because the company is looking at pretty aggressive growth of 40% CAGR over the next 5 years. They have a new management team in place, and probably if they execute well, probably in 5 years' time, it could potentially be a large cap.
Poonawalla FinCorp. Any other names? You've given us a stock in the adult category. Adult as in age-wise, young adult. What about in the kids category? Smaller name.
We own some small cap IT companies like Birlasoft. We think, again, they had a management change about 2 years back. The new CEO is fairly hands-on and pretty focused in driving strong growth. If you some of these mid-caps companies as they exist today, Persistent or Coforge, they've gone through a very strong growth cycle over the last 7 or 8 years. Birlasoft today is exactly where probably a Persistent or Coforge were 5 years back. You've got a new CEO who's run a very large business for Wipro. He used to run $7 billion P&L. Now he's running a company which is 1/10 of the size, and aspiration is to get company to a much bigger size over the next 5 or 7 years. the opportunity out there in IT services is significantly large, and we'll see many companies in IT services in India which will transition from mid cap to large cap and probably from small cap to mid cap. So we think Birlasoft is one of those companies which is under $1 billion of revenue and probably should cross the $1 billion revenue threshold probably in the next 2 to 3 years, and probably actually evolve as a mid-cap IT company over the next 5 years. And if it plays out, then probably I think there are very handsome returns for shareholders over the next 5 years in the company.
Oh, interesting. All right.
One regulatory disclosure before we go off is we have exposure to all of these companies, so investors should do their due diligence before acting on any of these.
All right. Interesting. Pankaj, final question. And just to help us lead into the next discussion, what's the view on auto ancillaries in particular? How you'll position there?
Well, again, we are very selective because valuations in that space are rich. The auto sector itself is going through a cyclical slowdown, and that has had a rub-off effect on some of these ancillary companies in terms of their growth moderating. And some of these companies have large exports where also things have slowed a bit, especially in Europe, and which is again having a rub-off effect on these companies. So one clearly have to look at companies which can, despite a cyclical slowdown, can deliver strong growth and probably have strong edge in terms of the product they have in the marketplace in that sense. So we are fairly selective in this sector. We do have exposures, but we are fairly selective.
Okay. Thank you very much for joining in. Let's move on and invite let's invite the management of Endurance Tech on the show. Now, the stock has done pretty well this year, up nearly 30% in 2024. In the last 1 year, the stock has gained more than 50%. The management is focusing on high-performance braking systems for the 350cc plus premium bikes, and margins in four-wheeler business are higher than the two-wheelers. To discuss this and a lot more, we have R.S. Rajagopal Sastry, the Group CFO of Endurance Technology. Thank you very much for joining in. I think, Mr. Sastry, you were appointed as the Group CFO effective 6th of June, 2024. So you've been, now handling things for the last 2 or 3 months. So what is your own goal, for the next 3 years? If you have to look at the business change, the product mix, the margins, tell us what is your own aspiration or goal that you've set for yourself?
So, good morning again, and thanks for this opportunity. Personal goals, if you look at having moved from a sector which was very successful, a company which was very successful, and then the first few months I've been looking at this company and I had a good run in terms of how I could take over my new role. I'm only looking at the strength of the company as of now. So the quality of investments, the kind of people the company has, the care with which the product offerings have been developed, the assets which are of top quality in terms of their locational strength, and also the quality of the machines or the shop floors, the best-in-class governance principles, the professional management, all these things are already there. They have been put in place. Now, if you look at my personal goal, I think that I need to quickly take this company towards that inflection point where we start using or exploiting the significant headroom in the businesses the company already is in. So if you look at the product offerings, like you said, high quality braking systems for 350cc, right from the castings, the suspensions, the braking systems and various other offerings are of very high quality, and they are with the aim of making the vehicle better, making the road safer. And in those areas with all the customers in India, there is a lot of headroom to make inroads into those models in which we are not currently present, and use that as an inflection point to grow the top line. And from the bottom line perspective, I'm again saying that there are significant opportunities to bring in operational efficiencies just by looking at the data, analyzing data, strengthening the team from a controlling perspective. And we are looking at proactively giving ourselves targets that we make the bottom line better. And cash is the next element, that we need to have significantly high levels of cash, and so that we're able to invest and make use of those opportunities as and when they appear in the market, in organic and inorganic. So my goals are threefold: help the company get to that inflection point, the top line growth, look at operational efficiencies with better data management, better team managements, so that we're looking at profitability, and improve on cash. so that we are ready for the company to, as we go on the growth path.
All right. Hi, Mr. Sastry. Good morning. Nigel on this side, and congratulations in your new role. We wish you all the best, and we look forward to interacting with you more often. Since you mentioned that the focus is also on growing the top line, last 3 years you have been growing in the mid-teens. How do you see growth shape up from year on? And do you think there are enough levers in place to push up the margins? Maybe you're looking at 100, 150 basis points improvement in margins. If you would give us the next 3-year goal.
So if you look at the company per se, we have a stated objective that we grow in multiple areas. So one is what we do as business as usual. Today, if we have our casting business, we added the forging business, the braking systems which we make, the suspensions. This is business as usual. This in itself presents an organic opportunity as the two-wheeler industry grows. Plus the ability to grow more into the supply chain, more in terms of our shares of business with each customer, it already offers a significant growth opportunity. The other opportunity is that as the vehicles are being offered in the Indian market, there is a tendency to make them premium, both in terms of better safety, which means automatically our braking systems, which is the ABS, or have better suspensions and feel to the customer, the feeling of how the driver feels. Then that means our inverted front forks and other electronically controlled suspensions, and then better quality castings and forgings. That in itself offers an opportunity to grow our top line. And the other element in our stated objective is that we need to grow, or we are planning to grow our presence in India in the four-wheeler business. Today, if you look at, we are in the range of 4 to 6%.
Yeah, Mr. Sastry, let's get a little bit more into those numbers then. You know, the four-wheeler segment, as you said, I think on a consolidated basis, it's mid-20s. In India, it is far lower. So from that 25%, I believe as a percentage of consolidated, you want to take it to 45%. And even aftermarket, I think it's around 5%. You want to double that. So run us through a couple of numbers with the objectives on both these two parameters.
Okay, you want to look at how the numbers pan out, or how we actually are planning to grow in those regions?
On both these two segments, sir, and what is the vision? You know, the aftermarket is 5%, you want to double that. Four-wheeler is around 25%, you want to take that to 45% on a consolidated basis. So the roadmap for both these two.
The roadmap is that one would come from the organic growth in Europe. Europe is 100% four-wheelers today, with a very small percent which goes into two-wheeler. So we are looking at organic and inorganic growth within the European market, which automatically will bring some growth. And within India, we are making specific investments in some regions, making plans which are earmarked for the four-wheeler business, both in the domestic and the exports. To begin with, we will be offering our staple product, which we are experts in, which is the forgings and the castings. And in due course, we will be looking at offering also suspension braking systems in the four-wheel market, as and when we are successful in identifying the partners with whom we go with. So we have in-house skills in these regions. So if you look at the current four-wheeler business within India is a very small number, and we are looking at to grow at least, if we have to get to the 40% or 45% as an overall, from the 25% which comes from the European business, we need to look at another 20% coming from the Indian business. So that's how we are looking at how do we have dedicated plans, which we already are in the process of commissioning for some parts of the business, at least in the casting area. And in other areas, we are looking at partners to bring in business in the four-wheeler region. And if you look at aftermarket is it's a strategy of reach. It's more how do we understand the B2C side of the business while we still continue to be a B2B. So we are looking at innovative ways of how do we improve the reach within India. Yeah. You have a question?
Right. We take those points, Mr. Sastry. Hi, good morning. Prashant here. Just very specific, sir, from Europe. What have been the order wins in Q2 so far? If you can give us a rough idea.
So as of now, we have not consolidated that number of the order wins within Europe. But if you know, we have been getting a lot of order wins in the past 1 year or so, and we are now looking at those peaking in terms of supplies.
Okay, because I mean that pipeline in terms of new order wins was drying up very fast. That's why I'm asking in Q1 as well. We'd seen a if you look at FY23, 24, then you look at the Q1 of 25, sharp slowdown there. So I'm just trying to understand, are things looking a little better, or is this going to be, what should we look at, if you can provide us with some numbers?
So if we have to look at numbers per se, the order wins and orders which have been happening in the past 1 year or so were in the electric vehicle segment. And a lot of OEMs within Europe, and that's common news, that they are going slow on their electric vehicle offering. And they're going back to increasing the volumes and trying to continue with the ICE offering which they have. And our order wins were in the electric vehicles and also in the conventional. We already had existing orders in the ICE vehicles. So from a sales perspective, we are continuing to service the ICE models, which we already were offering. And some of the volumes which are the electric are also happening. But based on the discussions with the teams in Europe, we are seeing the chances of revival in the upcoming months in November or so. But our focus was on the internal strengths, keep our cash position positive, keep our investments in good health, so that whenever this turnaround will happen in Europe, we're able to capitalize on that and get more volumes. But as of now, we are still seeing that compared to all other tier ones, tier twos in Europe, we are seeing good traction in our sales. At least in a couple of months, which we saw just go by, we have been better than the market in terms of sales. We are doing better numbers than on a year-on-year basis. And that's because of the order strength, which we already had acquired. And we are looking at some development or improvement in the coming months.
All right, Mr. Sastry, the buzzword is EV. So could you tell us first, what is the current order book? If you could give us an updated number, point number one. Point number two is, as a percentage of your total mix, how much does EV contribute, and where is that number headed? If you could give us an outlook, say, for the next 3-5 years. Our order book, EV contribution, and where is the EV contribution headed?
Okay, if you want to break it into different businesses, which we already have in our control, in India, our EV order book is in size of 840 crores of Endurance Technologies. And our subsidiary Maxwell has got an order book of 420 crores. And our European companies have got an order book of 287 million euros. All these are orders which we already have won and which are expected to peak in terms of sales in the upcoming years. Like Europe would peak in the year 27, 28, and India would peak in the year 27, and Maxwell also would peak in the year 27.
All right, Mr. Sastry, we'll leave it there. Good luck to you and your team as you execute on the threefold strategy, as you said. Top-line inflection, there is operational efficiency, and improving cash position at the company. Thank you, and we wish you all the success. We'll take a quick commercial break here. We're going to come back with Prateek Jain and of PwC India and Saurabh Agarwal of EY. We put the focus on the takeaways from the GST meeting and what came out of it. Stay tuned, that's coming up. Okay, welcome back. Take a look at what's happening with Paytm, and we'll put that up at the bottom of the screen as well. 7% higher, and that's a big move. That block is expected to happen, and actually going into that block, because there's all sorts of chatter whether there will be perhaps a strategic investor who will come in and pick up that block, and that perhaps will act as a bit of a clearing event for the stock to re-rate post it. So we'll see when that happens, but strong buzz expectation that is around the corner, perhaps in a day or two. So we discussed this yesterday. We spoke about this in the morning as well. 670 now on Paytm. That is by far the stock of the day, stock of the morning, which is actually coming through. Well, let's get some updates from the GST Council meeting yesterday as well. No major decisions really were taken, but a slew of issues have been referred to the ministerial panels. The Council has referred the matter of compensation cess to the new panel of ministers. Decisions on reducing GST on life and health insurance premiums and payment gateways have also been deferred, pending a decision by the group of ministers. Tax on cancer drugs is also being cut, while GST on namkeens has been cut to 12% from 18%. Why don't we quickly hear out the Finance Minister, Nirmala Sitharaman, on the key decisions taken, and then we'll invite our guests in.
The rate rationalization GOM under the Deputy Chief Minister of Bihar will be doing its job. But under his leadership, with newer members who have volunteered for the limited purpose of medical health insurance related GST, we have told them that they will look into this matter and come with a report by end of October, just 1.5 months' time. And the GST Council, which will meet in November, will finalize based on this report, which will come from the GOM. We have agreed to form a GOM, which will now take it up to study every state and their discussion, because Karnataka minister came up with figures which are applicable to his state. So we've said all other states which want to give theirs, we're not compelling anybody, but whoever wants to give can give. They will be, again, a group of ministers who will decide how to go forward in the name of compensation. Says it shall no longer be compensation post March 2026, but that says how to go about it, what to do with it, and so on will be discussed by the group of ministers.
Okay, well, let's talk more about this. Prateek Jain is partner at PwC India, and Saurabh Agarwal is a partner at EY. Gentlemen, great to have both of you here. Thank you for your time. Prashant here. Prateek, bit of a, not a dampener, maybe more coming with a lot of matters being referred to the group of ministers. But what stood out to you?
I think I don't agree, Prashant, that was a dampener. I think there's a lot of good decisions which were taken. If you talk about the industry segment which got benefited, clearly airlines, foreign airlines is one, where there's a clarification. Data hosting services, data centers, they said that it will qualify as export. On real estate, they said that preferential location charges will not be subject to, or will be subject to GST at a concessional rate, not at 18%. And for electricity distribution companies, they said that anything which you collect, like electricity charges or electricity meter charges and etc., will not be taxed and so on. So I think there was a lot of positives to be taken from this. Also, the rate rationalization, it seems that government is now in a hurry to kind of do that quickly, which was in the offing for last 2-3 years. So in next few months, perhaps a decision will be taken on that as well. Yes, there are decisions like insurance, health insurance and life insurance, etc., which has been referred to the GOM. But I think that decision will be taken soon on that. So overall, I guess a lot of positives to be taken from this.
You know, when I say dampener, it's always from what the market. I mean, it's a high bar for stock markets, but you can agree, right? But there is, of course, that matter of health, and insurance was one. And the other one for real estate, it was not really, of course, something, but, you know, something on cement. I don't know if really that was really something which perhaps would have been considered, or were you hearing anything, Prateek?
Look, I think that'll be part of the overall rate rationalization exercise. There is perhaps no immediate need to kind of look at that. And if you look at cement, even prior to GST, the rates were quite high. I mean, an effective rate of taxation was higher than what you have today. So obviously there is a logic to this, but I guess that'll be have to be looked at as part of the overall rate rationalization. I don't think that decision will be taken in a hurry.
Will not be taken, and perhaps part of the overall rate rationalization, as you said. Saurabh, coming to you, what are the aspects which stood out to you?
So, Prashant, I think there were three main things which were there in the GST Council and which were being considered. The first and the foremost was around the GST rate rationalization piece, wherein they have formed a committee of group of ministers to take care of the same. The second thing, which is around the entire digitalization, I think that's the key one, which is around B2C invoicing, which will take care of the fake invoicing which is happening in the system. At the same time, when we look at from a perspective of the invoice management system, which has been aim of the government since the launch of the GST reform, wherein there has to be a concept of mismatching, and they have approved the invoice management system as a concept to go ahead with, which means that the industry should look forward to more digitization and more forward-looking approach in terms of matching concept and digitization from the end of government. And the third thing is that the government's intent has been to settle the disputes, whether it has been in case of advertising agency, or it has been in case of foreign airlines, or it has been in case of the payment aggregators. They have been looking into settle the disputes while the payment aggregator issue may not have been resolved. I think something which got missed, which I will say, which was a lot of expectation of the industry, was around the foreign shipping line issue, where the foreign shipping line, foreign airlines, more or less the issue is the same, but the foreign shipping lines maybe has been deferred to the subsequent council meeting.
Saurabh, on health, right, with medical group, term, etc., do you think, of course, it's been referred to the GOM, but what are your expectations? And I mean, should we take it as a given that it will be, rates will be brought lower?
So I think the intent is very clear. They are considering around 3 or 4 options. One of the option is to bring down the rate to 5% for all type of health insurances, etc. The second option which they are exploring is to bring it down only for senior citizens. Third option which they are exploring is to exempt the entire, you can say, GST on the insurance sector, on health insurance and life insurance. I think the likely option which they should go ahead with in near future should be the 5% rate of GST. That's more so because when we look at the amount of insurance which the Indians have been taking compared to any of the developed countries, we are still very low when it comes to the overall insurance being taken by the Indian citizens. So I think there is a requirement to push this particular part by bringing down the cost of insurance.
And this is, all of this will typically just be, in a way, passed through, right? For companies, in that sense. For viewers who are watching from a stock market angle, Saurabh, if, say, for example, this is rationalized, you essentially pay less premiums.
Yes, correct. You pay less premiums.
Right. Pratik, anything else you'd be watching out for on an urgent basis going forward from these GOMs, etc.?
Yes, so one clearly is on the rate rationalization, right? So 5, 12, 18 and 28. What exactly do they do in the rate rationalization? Of course, there are multiple options. Either 5 and 12 could be merged into a single rate of 7 to 8%. 12 and 18 could be merged to, let's say, 15, 16% and so on. And every decision that they take will have a wider ramification for industry. So that's clearly one area to watch out for. Compensation cess, what will be the future of compensation cess is another one. I'll also see that over the next few months, what structural changes government is looking at. Do they want to bring in petroleum products under GST? Do they want to bring in real estate, everything under GST and so on? On petroleum products, I'm quite hopeful that on natural gas and ATF, perhaps a decision will be taken soon. And the last but not the least is, are we looking at simplification of GST legislation? And, things like input credit provisions and so on. So I think next few months will pretty much determine what kind of GST we're looking at over the next 5 to 10 years. What's the future of GST in India? So interesting time for all of us to kind of keep a watch on.
Natural gas was thought to be a sort of a low-hanging fruit, right, Pratik? Clean fuel and all that. But what's holding the government back, you think?
Look, I think I agree with you. It's a low-hanging fruit in that sense. The revenue implications is not that much. And it's a clean fuel, and we're looking at, our net zero ambition and so on. I think there are a few states which are impacted more than others by this decision. So I think there is a consultation happening between the governments, and consensus is yet to emerge. But I think that has to be the starting point. I think over the next few months, I'm quite hopeful that on natural gas, they will look at including that in GST.
You'd agree, Saurabh? And what's on your radar looking forward?
So I think gas is one particular area which should come into the ambit of GST, and the government has been looking forward to it. I think one more important point is around the electricity. I think there has been 2-3 times the study has been conducted by the government through their nodal agencies and Ministry of Power around whether to include electricity into the ambit of GST or not. We know that the cost of power in India is by far higher compared to that in many of the other neighboring countries. And it's a requirement of the hour to bring down the power cost, and maybe by including electricity, within the ambit of GST, we can bring down the cost of electricity for the consumer as well as for the commercial and industrial customers.
Got it. We'll leave it there. Gentlemen, thank you very much for joining us, Prateek and Saurabh. Thank you for being with us here this morning on CNBC TV 18 and appreciate your time here. Well, the market's in the red now. I mean, just a quick look, 13, 14 points down. So, it's a come down from the day's high. The high was 25,014 and we're at about 24,900. So that is about a 100-point fall, nearly about a 100-point pullback from the day's highest level.
The
Mitesh?
Nifty Bank is also now down nearly 150 points, so 0.25% gone on the Nifty Bank. So Bajaj Bajaj Finance, Bajaj Finserv, life insurance companies, State Bank of India, these are stocks where you are seeing some pressure.
Absolutely. Well, we'll take a quick commercial break here. Actually, let's bring in Mitesh before we take that break and ask him for a quick view on the market. And also Paytm. Paytm is up 8% now. But Mitesh, go on. Markets first. Mitesh, you'll have to unmute yourself, please.
Yeah. I've done that. So on the index, I said that holding on to this 24,800 level was a positive, but we'll have first pivot at about 25,050 odd levels. We made a high of around 25,015. I think there's still a struggle, because the intraday structure hasn't improved. So 24,800 will be tested maybe one more time, maybe two more times. So I think we'll keep watching that. Unless until we don't close below that, I think things should be okay. And after this shaky kind of a movement, the market should recover on the upside. The worry will come in case we start getting a close below 24,800. So for the time being, watching that level. And on Paytm, I think I've missed the rally. The rally started a few days back and a few weeks back rather, and still is looking strong to me. I think the stock is showing signs of heading towards levels of around 800 to 8. First target is 800 and then we have a target of around 870. So there are still more upside left. It's slightly overbought, so in case you want to enter afresh, then try to buy on declines closer to about 620, 600 is your buying zone, and keep a stop below 565. But if somebody's holding out, just tail your stop losses to about 565 and hope that the targets of 800 plus are being achieved.
All right, Mitesh, thank you very much for that. So maybe buy and pullbacks, that's the advice coming in on Paytm right now. Markets, of course, down about 25 points. We'll take a break. We're going to come back with commodities. Manisha's here, is going to be here with what's top of mind. Stay with us.
Out. Welcome back. After opening at 25,000 and plus and higher, markets have given up and now in the red for the Nifty and the Sensex. Not by a whole lot, but you can see the momentum, the early morning momentum has faded a bit. But Manisha is now standing by and she's going to be focusing on iron ore. Manisha.
Well, thank you for that. I'm looking at overall metals as a pack, but yes, iron ore first up because it is the worst performing metal in 2024 until time. It has seen a very sharp decline. We've seen 100 break on the lower side and 90 also give away now. The prices have declined by 10% and are trading at a 2022 low. As I said, all the China data has been on the weaker side. So whether it has to do with services, manufacturing, factory, property numbers have been weaker, and that has continued to weigh on iron ore in that sense. Also, it's been the most vulnerable because of the China slowdown numbers there. The inventories are on the higher side and demand not as much. Also, when you look at the China steel prices, they are trading at a 2017 lows. And because iron ore is a major ingredient within that, we have seen pressure come in for this one as well. So when you look at the industrial metals in 2024, iron ore perhaps tops the list when it comes to decliners there with 33% of a decline. The next metal is down by 5%.
5%, which has led. Nickel continues to see weakness, 4% down in the 2024 right now. And then we turn into positives, where aluminum is trading in the positive, 4% on the higher side for 2024 until now. And we also have other metals which are trading in positive, like zinc and copper, which are trading up by nearly 2 to 5%. And the max gains clearly coming in for tin. This is a major ingredient for semiconductors. And with the kind of demand that we are seeing globally for that one, tin clearly has been a beneficiary of that, a best performing metal, as you can see, in 2024 until time. I want to talk more about copper because we've seen LME inventories continue to gain. The way we stand at 316,000 tons right now, it is a 5-year highs. The Chinese inventories, meanwhile, have continued to decline because of production cuts and higher exports that they have continued to do. So much so that Chinese demand right now is at a premium, while it was at a discount in the month of July, a premium of $62 nonetheless. So that is what really seems to be supporting copper prices right now. Aluminum, in the meanwhile, also seems to have moved into a backwardation. $10 backwardation when you look at October and November. The way the CFTC data shows up, people are selling aluminum in October and buying in November. That is the reason that you have seen that change come in. So various individual fundamentals at work, but what the street will watch out for is the US inflation data. You have CPI numbers coming in on Wednesday and the PPI on Thursday, and that would give you further cues.
All right, Manisha, thank you very much for that. Ekta is now joining us, and let's talk about the pharmaceutical space with regards to what's happening in the US. Ekta, over to you.
Thanks for that. Well, the big development is that the US has passed the much-awaited, much-debated Biosecure Act. So it's basically the House of Representatives, and now it will go to the Senate for a vote as well. What it aims to do is to reduce the kind of benefit, to reduce the dependence that a lot of the US companies have on Chinese biotechnology companies, and they've named 5 companies specifically in the act as well. Now, what exactly does it mean for Indian CDMOs or contract drug manufacturing operations of the likes of Laurus Labs, Syngene, as well as a couple of others such as Newland, Piramal, and even the likes of Divi's Labs? It means that they could incrementally possibly benefit from more business if in case the large pharmaceutical companies or even the smaller pharmaceutical companies think that the Indian companies are capable of handling their business. So the likes of Laurus, Piramal till now have indicated that yes, they are seeing an increase in terms of requests for proposals, or they are seeing a large number of inquiries as compared to before. But none of it has still turned into tangible business because a lot of the larger pharmaceutical companies are still assessing their options, and you still have till 2032, which is the timeline to sort of diversify your supply base. But it's only the next 8 years, so it takes around 3 to 4 years for a company to actually get those requests for proposals and finalize on a company. So we could see all of this take place in the next 3 to 4 years. But it is a tangible opportunity. India becomes a +1, or it becomes a diversification in terms of the supplier base. Companies such as Syngene and Divi's are supposed to be at the forefront of this opportunity. Syngene has seen a 50% rise in terms of their request for proposals in Q1. Divi's Labs has said that they can benefit from existing portfolios as well as drugs which are in the phase 2 and phase 3 as well. The next couple of months, maybe the next couple of quarters, will give you a fair assessment in terms of where companies stand, but definitely a big positive for a lot of the CDMOs.
Thank you very much for that. IT is also holding up pretty well. So the Nifty IT index is a gain of nearly 1%. Now, Motilal Oswal has come out with a note where they're saying the IT services sector could be on the cusp of recovery after a long period of discretionary spending cuts. So they've analyzed the health of the global economy, the impact of GCCs on IT services company, how generative AI will play out. And based on all that, they've come out with a framework where they're giving marks to each of these individual points. And these are the top picks. It's HCL Tech, LTI Mindtree, Persistent, and on Coforge, it's an upgrade. The earlier target price was 6,100. Now it stands at 8,100, and it's an upgrade to buy. They do not have a sell call on any of the IT companies. The other buys include TCS, Infi, L&T Technology Services, and Cyient. The other neutral calls for Motilal Oswal include Wipro, Tech Mahindra, Mphasis, and Zensar. No sell calls. Now, amongst the individual sectors, they're saying healthcare, manufacturing, and BFSI are the three verticals which will lead the recovery. So for healthcare in particularly, the negative impact of the rise of GCCs in India, the captive centers, is very less. And therefore, healthcare is insulated, unlike, say, other sectors like BFSI. Now, BFS, banking financial services, will benefit as US cuts interest rates. But part of it is going to be offset by the rise of GCC. So healthcare, manufacturing and BFSI are the three sectors leading the global recovery for IT companies. Now, why the four companies that Motilal Oswal has spoken? So one, HCL Tech, amongst many other things, has a higher exposure to healthcare. For LTIMindtree, they're saying the company, again, BFSI exposure is there, but the company has strong capabilities in data engineering, which positions it well to capture the pre-generative AI spending. Persistent has a strong presence and exposure to high growth verticals like healthcare and BFS. And according to Motilal Oswal, Persistent's EPS revenue growth could be 21%, though valuations are at a premium level. And Coforge's upgrade is based on a valuation multiple re-rating. They also expect margins to go up, but now they're valuing Coforge at 38 times forward multiple.
Most brokers are now overweight, right? IT? Or is it, I mean, it's no longer a sort of anti-concept.
In the last 3 months, we've seen
turned.
a lot of them have turned, yeah.
Absolutely. Well, so that's Motilal's call on IT sector. Well, our life insurers are sinking a little bit more. They're down about 3%. HDFC Life on your screen. I think SBI Life is also down about 2.5%. We're going to take a quick commercial break here. We're going to come back with our special segment. It's the economy. Lata will connect with Kamakshya Trivedi of Goldman Sachs, and they decode key data and estimates ahead of the September 18th Fed meet. Stay tuned, that's coming up.